Good evening. In the fast-moving world of finance and crypto, few stories this week have grabbed investor attention like the meteoric rise of ASST, the stock symbol for Asset Entities Incorporated, now at the center of one of the boldest corporate pivots we've seen this year. The numbers alone tell a headline. In a matter of days, ASST surged more than 200%, driven by news of its planned $1.3 billion merger with Strive Asset Management, a firm known for its disciplined, fundamentals-based investing approach, often seen as a philosophical counterweight to the ESG-driven trend. To understand what's happening, let's unpack the story step by step. Asset Entities began as a modest tech and social media services firm, operating influencer marketing channels and digital content systems. A small NASDAQ-listed company with limited liquidity, few would have expected it to sit at the intersection of Bitcoin, private equity ambition, and a rebranding into a new-age asset management empire. Yet that's exactly what's unfolding. Earlier this month, Strive Asset Management announced plans to merge with Asset Entities, creating what they described as the first publicly traded Bitcoin treasury asset management company. The idea: combine Strive's expertise in managing conventional assets with a balance sheet structured around Bitcoin accumulation, strategic biotech acquisitions, and distressed asset arbitrage. In parallel with the merger, the company unveiled a massive funding deal, a private investment in public equity worth $750 million, priced at $1.35 per share. That price represented more than a 120% premium over ASST's prior trading levels. The agreement also included an additional $750 million in warrant potential, meaning the total capital inflow could reach $1.5 billion if fully exercised. For context, before this news, Asset Entities' entire market capitalization hovered around $40 million. The scale of this financial injection dwarfs anything in its history. Following the announcement, trading activity exploded. Within hours, ASST shares spiked more than 200%, with trading volumes surging across retail and institutional desks. Binance Square's live feed noted a 21.5% gain in a single session, driven by investor Mike Alfred's disclosure of a million-share position, a sign that institutional capital was taking notice. But the story goes deeper than price action. Strategic shift, from social media to Bitcoin treasury. The merger redefines ASST's business model entirely. No longer a digital marketing play, the company now aims to operate as an alpha-generating treasury. The strategy is ambitious: acquire undervalued biotech companies trading below their net cash value, convert those assets into Bitcoin or Bitcoin-linked instruments, buy distressed Bitcoin litigation claims at discount, for instance, claims from the Mt. Gox recovery process, and invest in structured Bitcoin credit vehicles. Essentially, ASST seeks to create yield and long-term capital appreciation by combining financial engineering tactics with crypto-centric exposure. That's a complex and risky path, but also one that could, if executed correctly, yield extraordinary returns. Market implications. The excitement isn't purely speculative. For investors, ASST represents a new kind of hybrid: part asset manager, part Bitcoin holding company, part venture acquisition engine. In an environment where Bitcoin's institutional adoption continues to accelerate, having a listed vehicle that mirrors this mix can be attractive. CoinCentral's analysis called the move a rare marriage between Wall Street structure and crypto conviction. The report noted that the $1.3 billion merger effectively places Strive in a position to compete with MicroStrategy, the publicly traded company famous for holding billions in Bitcoin, though through a more diversified, actively managed approach. Yet, this comparison also highlights the risk. MicroStrategy's value has largely moved in tandem with Bitcoin's price. If ASST follows that pattern, its share price could become highly volatile, rising and falling with the crypto cycle. Financial mechanics behind the hype. Beyond narrative, there are real corporate finance implications. Large pipe investments like this typically come with dilution: more shares issued to new investors, often at discounted or structured prices. That means legacy shareholders could see their percentage ownership fall sharply, even if the company's total value rises. The balance sheet transformation also carries execution risk. The company must manage liquidity while pivoting from service revenue to asset management returns. Deploying $750 million effectively requires disciplined acquisition strategy, deep risk assessment, and timing, particularly in volatile crypto markets. Analysts following the deal point out that the company's immediate test will be transparency. Investors will want detailed disclosures: how much Bitcoin will be acquired, what portion of funds will go into biotech deals, and how the treasury structure will operate. In the absence of that, speculation may overtake fundamentals, never a stable foundation. Investor psychology and market momentum. The rally in ASST mirrors a broader market appetite for bold crypto plays disguised as conventional equities. After a long bear market in digital assets, traders have been searching for exposure to Bitcoin upside without directly buying crypto. Stocks like ASST provide that proxy, a listed equity that moves like a digital asset fund, yet fits within traditional brokerage accounts. Meka's coverage called it a signal of renewed retail energy in the digital finance sector, highlighting how small-cap stocks with Bitcoin exposure have become magnets for speculative momentum. But the article also warned that these moves can reverse just as fast, once initial enthusiasm fades or regulatory scrutiny rises. The Strive factor. Strive Asset Management's involvement adds credibility, but also scrutiny. Known for its stance on shareholder capitalism and disciplined capital deployment, Strive's brand brings expectations of operational rigor. The merger represents a philosophical pivot, merging traditional finance discipline with Bitcoin's radical decentralization thesis. If Strive manages to apply institutional discipline to this new hybrid model, ASST could carve a niche similar to early-stage hedge fund structures that bridged commodities and tech in past cycles. But if execution wavers, the stock could quickly revert to volatility without substance. Wider lessons for investors. From a business finance standpoint, ASST is a case study in how corporate identity can be rewritten overnight through mergers and narrative power. It's also a warning on valuation psychology. A stock once measured on small business revenue multiples is now trading on macro crypto expectations. The underlying operations must eventually justify that price. At its core, this is about trust. Trust in management to handle billions in new capital, trust in strategy to outperform Bitcoin, and trust in regulation to allow such a hybrid model to thrive. Each layer adds complexity, each introduces risk. Still, the enthusiasm reflects something larger, a shifting mood in the market. The line between traditional finance and decentralized assets continues to blur. When a small marketing company can, through one merger, become a Bitcoin treasury giant in the making, it signals how quickly capital flows chase narrative and innovation. What comes next? All eyes now turn to the deal's closing timeline, SEC approvals, and the first financial disclosures under the merged structure. Investors will watch whether the promised capital actually materializes and how it's deployed. Any delay or transparency gap could trigger rapid corrections. That's the full story tonight: a merger, a rally, and a reminder that in markets built on both math and emotion, even a small ticker can carry the weight of an entire narrative.